Imagine waking up every day knowing the color of your skin changes your financial future. Why is it that in 2025, the median wealth of black households is just $44,890, while white households boast $285,000? What happened to the promise of equality?
Wow. That means for every $100 of wealth held by white households, black households have about $12.
Since the Emancipation Proclamation in 1863, black Americans have held less than 1% of the nation's wealth. Over 150 years later, that grim figure hasn't budged. Alexander Hamilton was the founder and chief architect of the American financial system. He once said that banking is how wealth is created. But for centuries, black Americans were forbidden to use banks. In an attempt to bridge the racial wealth gap, black banks rose up. But why did they all fail? Stay with me as we pull back the curtain on the dark truths behind the racial wealth gap.
Are you offended by the word nigga in it?
Why? Where'd that come from?
The first thing we have to learn about is discriminatory lending. After the Civil War in the late 1800s, black Americans faced many restrictions on their freedom and financial opportunities. Laws called black codes limited their rights and forced them to work for low pay. Banks run by white people often refused to serve black customers, denied them loans, or charged them higher interest rates. This unfair treatment created the need for black-owned banks to help their communities. To meet these needs, black communities built their own systems, such as mutual aid groups, credit unions, and cooperatives. One of the first black-owned banks, the Alabama Penny Savings Bank, was founded in 1890 by Reverend William Pettiford in Alabama, a region deeply affected by segregation laws. Inspired by Booker T. Washington's ideas of self-help and unity, the Alabama Penny Savings Bank supported black churches and professionals by giving them loans when no one else would. Reverend Pettiford worked with white bankers in Birmingham, who helped train staff and manage the bank, which was unusual during a time of strict segregation. In 1913, the bank built a 5-story building that not only housed the bank but also provided space for many black-owned businesses. The rent from these businesses helped fund the bank. However, since most customers were low-income, deposits were small, and withdrawals were frequent. This made it harder to earn profits or lend money. To keep the bank running, owners often used their own funds. Despite these difficulties, the Alabama Penny Savings Bank thrived under Pettiford's leadership. By 1913, the bank's assets were over $540,000, equal to $17.1 million today. It became the largest and strongest black-owned bank in the U.S. by 1914. Unfortunately, after Pettiford's death, no one could save the bank, and it closed in 1915, as customers lost all their money. This shows that the harsh conditions of segregation made it hard for these banks to survive in the long term.
Do you think a Negro family moving here will affect the community as a whole?
I think that, well, the property values will immediately go down if they are allowed to.
The next major obstacle blacks face in building wealth was housing discrimination. Home ownership is one of the best ways to build wealth. However, if you don't own a home, you miss out on that growth and financial security. Housing discrimination, through practices like redlining, made it harder for black families to buy homes. Redlining was a government-supported system where banks refused to give loans to black and brown neighborhoods, marking them as undesirable by drawing red lines on maps. Even one black family in a middle-class neighborhood could lead to the federal government denying loans in that area. Because of this, black families were often forced to turn to predatory lenders or couldn't buy homes at all. This system wasn't accidental, it was planned and legal at the time. Black banks stepped in to fight these unfair policies. In 1903, Maggie L. Walker became the first black woman to start a bank, the St. Luke Penny Savings Bank, in Richmond, Virginia. Her bank supported black families by offering home loans and jobs. Walker famously said, "Let us put our monies together. Let us have a bank that will take the nickels and turn them into dollars." By 1920, her bank had provided over 600 mortgages to black families. However, owning a home didn't mean the struggles were over. In 1925, Dr. Ocean Sweet and his wife Gladys bought a home in Detroit for $6,000 more than its actual value. After moving in, a white mob surrounded their house for days, demanding they leave. When the mob started attacking their property, Sweet defended his home, leading to violence. A white man was shot, and Sweet was charged but later acquitted of murder. This fear that black families would lower property values caused many white families to leave neighborhoods, leading to a cycle of decline. When wealthier families moved out, property values dropped, businesses stopped investing, and neighborhoods were left underfunded. Despite these challenges, Walker's Bank continued supporting its community for nearly 100 years, until just before the 2008 financial crisis. Housing discrimination has made it harder for many black families to become homeowners, further widening the wealth gap.
Oh, you must be so glad to be in New York. The South is so racist. The South is so racist. Oh, you mean the part?
The third challenge blacks faced was economic segregation. Economic segregation means communities are divided by race and wealth. It's been over 50 years that redlining has been illegal for over 50 years, but its effects are still visible. In many U.S. cities, wealthy areas sit next to poor neighborhoods, often in historically black and brown communities. These areas usually lack access to good schools, health care, and opportunities to move up in life. This cycle of poverty started with slavery, black codes, Jim Crow laws, redlining, and mass incarceration. The wealth black families should have was stolen, and the wealth they could build is hard to achieve because they face predatory financial systems that profit from their poverty. Black banks often serve these poor neighborhoods, but it's difficult for them to grow when the communities they support are underfunded. But what if low-income neighborhoods could keep money circulating within their own communities? History shows us what's possible. In the early 1900s, during segregation, some black communities thrived. One example is Durham, North Carolina, home to more black millionaires than anywhere else in America at the time. Durham's Haiti neighborhood had a strong black business district known as Black Wall Street. This community supported black businesses, fostered innovation, and kept money flowing within the neighborhood. Mechanics and Farmers Bank in Durham was key to this success. It supported small borrowers like farmers and workers, helping create a thriving black middle class. The money stayed in the community for years, building wealth and opportunity. However, most black banks couldn't achieve this level of success. The challenge is that even when black communities build wealth, it often flows out into the larger economy, leaving little behind. As a result, the very banks meant to help these communities escape poverty often struggle to survive in that same poverty. For example, in 1958, North Carolina built a freeway through the heart of Haiti, destroying Black Wall Street along with homes and businesses. F Bank couldn't sustain itself as black banking declined over decades. By 2015, the bank decided to expand its services beyond the black community to stay in business. Economic segregation remains a barrier today, but history shows the potential of communities working together to build and sustain wealth. Imagine walking into a bank where everyone understands your struggles and roots for your success. That's what black-owned banks have aimed to provide for over a century. In 1976, there were about 50 black-owned banks. By 2001, that number dropped to 48. And by 2023, just 22. Why the decline? Economic crises like the savings and loan crash in the 1980s and the 2008 Great Recession hit black households the hardest. These crises drained wealth from the community, making it harder for black-owned banks to survive. Even today, nearly half of black households are either unbanked or underbanked. That means they don't have reliable access to banking services, compared to just 15% of white households. And when it comes to buying a home, black families face even more barriers. In 2021, over 15% of black mortgage applicants were denied, while only 6% of white applicants heard no. This is where black-owned banks step in. They practice something called relationship banking. Unlike big banks that rely strictly on credit scores, black-owned banks take a closer look at the whole person, their story, potential, and needs. Movements like #BankBlack have brought fresh energy to these institutions. Remember when rapper Killer Mike urged everyone to move their money to black-owned banks? That wasn't just a social media moment, it was a call to action. Even big corporations are stepping up. Netflix invested $100 million in minority-led banks, and PayPal pledged over $500 million to support minority businesses. But supporting black-owned banks isn't the only solution. We also need policies that tackle the bigger picture. Imagine a world where student loan forgiveness helps black graduates get ahead instead of being held back by debt, or affordable housing programs that give everyone a fair shot at homeownership. Black-owned banks are more than just businesses. They're anchors for communities that have faced systemic inequality for generations. They've been there through the toughest times, giving people hope and a chance to succeed. Supporting these banks, whether by opening an account, getting a loan, or spreading the word, helps strengthen communities and chips away at the racial wealth gap. The fight for financial equality is far from over, but every step counts. Together, we can make a difference and build a future where opportunity is truly for everyone. If you enjoyed this video, make sure to subscribe and click on the next video.